Hi all and welcome to the HUB39 summary of last night's federal budget. My name's Kosta, I'm one of the financial advisors at Catapult Wealth. With me today I've got Cathy Faulkner, one of the business advisors from Altitude Advisory, as well as Josh Snelling, client advisor at Mastertax. I guess the purpose of today's video was to give everyone a little bit of an understanding of how last night's budget might have affected them. So Treasurer Jim Chalmers handed down his first budget last night, and I guess to summarise it in an economic sense, it was probably a responsible and reasonable budget, and probably one of the main reasons for that was the economic times that we're in at the moment. So there's high inflation, there's low wage growth, there's wars. In Australia, we've got some natural disasters happening at the moment as well. So.
And economic slowdowns.
Economic slowdowns for sure. So I think last night's budget was probably a platform for future budgets. So there's no real sugar hits. It's, like I said, pretty restrained. But Cathy, did you want to talk a little bit about how taxation's been affected from last night's?
Sure, thanks Kosta. The taxation side of things, the budget didn't really have a lot of new things to it, but it did. What I want to do is I want to tell you about the things that have already been announced that haven't changed. So there is no extension to the low and middle income tax offset that ceased 30th of June 2022. They've actually not extended that past that date. And also it was reiterated last night that the stage 3 tax cuts are still to go ahead as previously announced. So those two things haven't changed. One of the things that I noted in the budget last night was the fringe benefits tax electric car discount. And the environment remains a focus of the government, and electric cars are part of that environmental plan. So what they've done is they've made purchases or the fringe benefits that relate to those electric cars to be exempt from fringe benefits tax. This applies to cars that have been provided after the 1st of July 2022. So I like that measure, I think that's good. The budget has funded a ramping up of multinational tax reform, and with a view to getting the global or multiculturals to pay their share of tax in Australia. The government's also allocated monies to the ATO for its tax avoidance task force. Those two measures are forecast to create a further $3 billion in extra revenue, but we're not exactly sure what those compliance things will be within the Australian tax system. There's clarification in this budget as to the status of cryptocurrency. Cryptocurrency will not be treated as foreign currency. When I talk crypto, I mean things like Bitcoin. And so it won't be treated for foreign currency in respect of GST, but also in respect of income tax. And just a reminder that the instant write-off for assets will not extend past 30th of June 2023. This means that if you want the instant asset write-off, you'll need to have your assets purchased and in place ready for use before that date. Otherwise, you will go back to the standard kind of depreciation regimes. The Treasurer noted in the budget speech and following interviews last night that they will look at tax reform into the future. So this is a steady as she goes kind of budget, but we might expect more to come into the future. So that's the taxation thing from me. I know that Josh, you wanted to talk about cost of living expenses, so I'll let you have a go.
Thanks, Cathy. So the government brought in a 5-point plan to try and reduce cost of living across Australia. So this is covers childcare, paid parental leave, medication, wages and housing. So for childcare, they're increasing the subsidy for the first child from July 2023 from 85 cents to 90 cents. And they're increasing the rate for all families with taxable income up to a combined amount of $530,000. The subsidy rate for families with multiple children under the age of 5 is staying the same and will cease 26 weeks after the first child's last session or when they turn 6. In regards to paid parental leave, the paid parental leave is increasing from 20 weeks up to 26 weeks by the 1st of July 2026. So they're increasing this by 2-week increments in 1st of July 2024 and 1st of July 2025. They're looking at splitting the paid parental leave timeframe between both parents, so that both parents have some time at home with the newborn. And they've brought in a use it or lose it function with the paid parental leave by assigning it to both parents. So if one parent doesn't use it, they'll lose that portion of the paid parental leave. And they've given the access so that parents can use their leave concurrently, so they can both be at home with the kid, with the newborn, and receive the leave payments together. For the general patient co-payment for medications on the pharmaceutical benefit scheme, they're reducing the cost from $42.50 down to $30 from the 1st of January 2023. From a wages point of view, they're increasing the minimum wage, and they're also investing in in housing, so building more affordable housing closer to central areas for everyone. Kosta, would you like to provide some more information about the superannuation and pension?
Absolutely, yeah. So they've announced a couple of changes to superannuation. The first one is the downsizer contribution. So what a downsizer contribution is, it's basically upon the sale of the house that you're living in, you're able to contribute the proceeds of that into superannuation without it affecting any other contribution caps. Previously, the age that you could do this was from 60 onwards. They've actually reduced the age to 55, so people are able to do that a little bit sooner. They've also made a couple of changes to self-managed superannuation funds, where members will have greater flexibility to contribute and I guess retain their funds while being overseas temporarily. A couple of other changes that they've made regarding social security and age pensioners. Social security wise, they've increased the threshold for the seniors healthcare card. They've actually increased it quite substantially, so it's about a 50% increase. So for a single, previously it was just over $60,000. It's now $90,000, the threshold. Couple was just under $100,000, it's now $144,000. So those thresholds have increased quite substantially, and I think a lot of people will benefit from cheaper medications as a result. So they are addressing some cost of living measures there as well. Regarding the age pension, they have announced that you'll be able to earn about $4,000 more per year without it affecting your age pension. So again, trying to stimulate people that are on the age pension to try and go back to work in some way, shape or form.
Bit of a productivity measure.
Absolutely. Cathy, did you want to talk a little bit about what the budget means for the agricultural industry?
Yes, and sort of generally for business also in this budget, there wasn't a lot to sort of hang your hat on. It's all going to be based around how the economy performs. But from an agricultural point of view and regional areas point of view, there was some good news. The government's going to spend $757 million over the next 5 years to improve mobile and broadband to rural and regional Australia, and I think that everybody who's in those areas will sort of say that's very good news. Also, $500 million has been put aside over the next 7 years to the farming sector as part of the National Reconstruction Fund, just as a support to that part of the Australian industry. Climate change and environment is again one of the strong suits of this government, and they're funding $1.1 billion over the next 6 years to support sustainable management of natural resources. Along with that, they're allocating $1.9 billion to establishing Powering the Regions Fund, which is assisting regional transition to net zero emissions, which will be good to watch. And they're also allocating some money at $20 million over the next 4 years to establish an outreach program to encourage farmers to participate in carbon markets. So that I think that sort of sounds very good. They're sort of putting some money into those areas to help farmers achieve what they want to achieve. The government's also put aside $630 million to the Disaster Ready Fund over the next 4 years to help with resilience against those kinds of disasters that we're seeing now, unfortunately. So I think that that's also a good measure that will be appreciated by the wider community.
Absolutely. Cathy, Josh, thank you very much. What we'll do is we'll also accompany this video with the blog, so if you've got any other questions or you want to know a little bit more about what the budget means for you, either read the blog or speak to one of us and we'll be happy to answer any questions. Thank you.
Thank you.
Thanks.